August was a month to forget for the crypto market, but can things really get that much better in September? We cover all this right now in the Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. Nick, how are you this week?
Yeah, I'm very good. It's been a bit of a quieter week on the news front, so perhaps we'll focus a bit more on a few more altcoin developments. But back at it again is the SEC and some more funny business with OpenSea. So perhaps that's the one of the biggest stories of the week. But maybe things are looking a bit better on the market front that you can fill us in, Matt.
Yeah, so August has come to an end, and yeah, for BTC, it sort of was consistent with its historical data, with August being really a rough month for Bitcoin, one of its sort of least favorite months. So on the monthly chart here, we have an 8.8% decrease for BTC, and it wasn't much better, or in fact, it was a lot worse for the other majors such as ETH, which was down 22%, Solana, which was down 21%. And probably the worst part of this all is that, you know, yes, in early August we had that really really strong selling off during that time of the Japanese yen sort of and all that business going on in Japan with the global stock market selling off aggressively. Uh, After all of that, in fact, a lot of the US stock indexes have actually finished a month higher. So the S&P 500 and the Dow Jones now both having positive months in August. So that is now the fourth straight monthly gains for each of those indices. So yeah, crypto is still sort of lagging behind. And yeah, the market conditions quite rather quiet really in both traditional, I guess, in the stock market as well as volumes over in crypto land as well, just being quite low just due to sort of seasonality reasons. So really looking forward to September getting underway and hopefully, some more activity as we head into the end of the year.
Thanks for that, Matt. So it's basically twiddle our thumbs and hope there's a bit more price action to come. So maybe things might be a bit quieter on the news front. And we can't really say that with the SEC. They're back at it again, this time issuing a Wells notice to the biggest NFT marketplace, OpenSea. If you weren't around during the 2021 boom, you might have missed the big NFT mania. Maybe that would be a good thing if you went in for that. But OpenSea, the biggest exchange at the time, or platform, they come out and we're a big player in the NFT market. SEC have come out finally now and said that they're going to be issuing them a Wells notice, which is essentially just an indication that they're going to have a please explain and possibly have an enforcement action coming up. So they're going to have some time to respond to the SEC claims. Now, this is a really controversial one, given that NFTs and securities hot topic. Now, there's a bit of a disclaimer here, obviously not legal experts, but the big conjecture here is, are NFTs actual securities, or is there a fine line here? So I've been having a look in the media roundup. From my perspective, it's looking a bit hazy in terms of whether SEC actually has a lot to stand on here. So I think we'll have to see it in the coming weeks to see if there's actually anything there, man. I'm not sure. What do you make of this news?
Yeah, not too much else extra really to comment on. I think it could just be another strategy by the SEC to just test the waters to see what things fall in their favor with different judges from different districts around the US. And yeah, I think targeting a beaten up company like OpenSea, I think I wouldn't be surprised if that was part of the strategy. I think they did raise at a valuation of about 13 billion back when all the hype was happening, and rumors are now on secondary markets that it's valued under 1 billion. So I think the SEC would sort of know that they haven't been doing that well. So maybe that's the reason why they're targeting them, as opposed to something like Uniswap or Coinbase, which are well capitalized and there to fight the SEC. So that's just speculation, really. And I think it'll be that similar sort of scenario where NFTs, securities, the judgment, I highly suspect, if this does go to court, it won't be anything really granular or final. If anything, it'll be targeted more at the brokerage sort of side of things, which has been speculated to be the problem with Uniswap as well. So, look, we'll continue to cover it, and of course, I think the big takeaway, as you said, Nick, is SEC continuing to be aggressive in terms of just going after different entities in the US.
Just a final point there. I did I did listen on the chopping block. One of the key lawyers on there were talking a key date of September 30 about the SEC uh, not being able to, or commencing legal action and presenting some wild notices. I'm not sure if you were picking up on this one, Matt. So is your view that we should expect some more potential uh, legal action by the SEC to ramp up, in September? If so, that's probably something to watch.
Yeah, this sort of, in my experience, sort of comes up every year where, yeah, the fiscal year in the US is sort of, September 30 is the final day of the financial year. So a lot of, even if it's not related to crypto, I think a lot of government entities and that are incentivized in some ways to sort of, prop the numbers up and make their budgets for next year look even more, I suppose, yeah, meet their budgets or ask for more money by, yeah, trying to get all these final, well, in this case, legal actions underway, so they can then, have more likelihood of getting a higher budgeted allocation maybe for next financial year. So, yeah, I think we saw last year a few sort of legal or court, yeah, legal actions getting underway around July, August, I believe was at the time of sort of Bittrex, Binance US, I think was around then. But then we also saw some in like November, I believe, as well. So, yeah, that September 30 date, it could very well be the case that we see, maybe Uniswap Labs finally getting underway. If that does go to court, I would be very, I think if it does go to court, I would expect it to happen this month and possibly even this OpenSea news here. So definitely just, I guess, keep an eye on the headlines, which we'll be covering in this podcast for sure. In terms
Perfect,
of
Matt.
the stablecoin sort of volume as well, we've seen supply hitting all-time highs. That was another, I guess, talking point from the past week. So US dollar stablecoins here, excluding the algorithmic ones, have, yeah, pushed up towards 168 billion US dollars. So Tether is still more than two-thirds of that total supply. But why is this such a significant sort of indicator? Really, it's just the fact that people are using blockchains, really. I always try to phrase it or think of it in the opposite. Like if this was going down, it would just not be a great sign at all, whether it's for the investment outlook or just the outlook of the usefulness of blockchains in general. So you want this always to be going up. Of course, strong upticks in supply are sort of correlated with bull markets just historically, because if you're printing more stable coins, that's a sign that people are wanting to use blockchains and potentially even buy extra cryptocurrencies as well. So that's why people get excited about this metric. But even all, just for on-chain adoption, really, it's also a really good sign to see. Yeah, stablecoins come all the way back from their March 2022 highs. So that happened last week.
Yeah, this is a one I'm watching too. One of my 2024 predictions was this hitting a new all-time high and potentially excelling above 200 billion. So a bit off that, but it's still in eyesight, I think. And to end the year with 200 billion worth of stablecoins, that's a huge deal. And as you said, it's a big win for crypto adoption on chain. It just shows people willingness to use on chain and DeFi and these important primitives that have been long talked about, and we're finally starting to see some of that activity appear on chain.
Onto some other big news from the past week. We had Binance as well, under the spotlight with regards to events happening sort of in Palestine. Nick, could you summarize what happened here?
Yeah, this is a news story that I saw a lot of people really concerned about, and a lot of information spreading across crypto Twitter. There were initial concerns that Binance actually froze all of people residing in Palestine, their funds on the exchange. Binance come out and confirmed that this wasn't totally the case, and that they were only seizing and halting some Palestinian cryptocurrency on the exchange. So for me, this is just an indication that hey, Binance is actually trying to step up their compliance game. They, had that massive fine and settlement in the US with US authorities due to their AML, their kind of good compliance practices that they weren't really running to the full extent. And this is kind of just an indication that, hey, Binance is really taking this stuff seriously and they're ramping up a lot of their compliance on the exchange. So it was linked to some potential Bitcoin selling. There was a lot of concerns about large amounts of money that Binance was moving on chain, but I found this one was maybe a bit of a nothing burger a bit, and Binance was just sort of complying with some local authorities wanting to seize some funds. So not too much to report here, and I thought this one was maybe taken a bit out of context.
Cool. Thanks for that clarification there. In terms of the ETF adoption, yeah, in August it was a case of Bitcoin ETFs, like as we've covered in recent podcasts, really just doing quite well. And that sort of overall accumulated Bitcoin balance of all of the ETF issuers is creeping up towards $20 billion worth of Bitcoin, which is far in excess of anyone's expectations back when these launched in January. So that's fantastic to see. As we've covered before, not all of that is exactly reflecting people or entities that are long Bitcoin. In other words, all of that nearly $20 billion worth of Bitcoin are not investments in holding Bitcoin. A big chunk of it, as we've explained many times, is just part of sort of like this trading strategy and different arbitrage strategies by these hedge funds and whatnot. But I would still be pretty confident in saying that that is the minority of that overall amount. How now that technically means less than 50%. I'm not willing to sort of put a percentage figure out there, but I think overall this is just a really good trend to see. So we want that number just to be going higher in very simple terms. For Ethereum, we haven't really seen that much adoption of the ETFs in general. That's after 1 month of trading now. We saw a streak of negative days for the Ethereum ETFs. I think it got up to about 8 or 9 trading days in a row of net outflows. And then in the most recent trading day, keeping in mind that this Monday, I think is a public holiday in the US, but I think on Friday we had flows of zero. So that's, again, something we haven't seen with the Bitcoin ETFs just yet, which again, I think speaks to how popular they have been. But having that end result of zero is quite common in the ETF markets. From what I have read about earlier this year, I think, from if my memory serves correct, the majority of ETFs out there in the market record zero net flow days, like every day. It's just to do with how they work. If they've got enough, redemptions and creations, if they can facilitate that, then they don't need to be purchasing more, or creating more ETFs as a net sort of figure. So for Ethereum, we've seen the first one of that. And again, what does this all mean, really? There just isn't that much demand for the Ethereum ETFs at the moment. We've talked about reasons why this is likely to happen at this time of the year in particular. The seasonality component, I think, is a really large one here. But absolutely, if this is ongoing until September, October, November, and we're still seeing these figures, it's absolutely fair to say that these have been underwhelming. And overall, I think a disappointment compared to everyone's sort of expectations, which is the complete opposite of the Bitcoin ETF. So I'm not willing to draw that conclusion just yet because of seasonality in particular. But I'll be watching for the next 1 or 2 months to see if these pick up at all.
Perfect there, Matt. That's one I'll be watching as well. The other thing that caught my eye this week was El Salvador came out in a the president came out in an interview with Time Magazine talking about Bitcoin adoption. Now, this was something that we actually have a lot of questions about from our member base. Looking into El Salvador, has the Bitcoin experiment been successful or not? He came out and gave a bit of an indication that hey, adoption has been much slower than he had hoped for, and that he was still positive about, I guess, making Bitcoin legal tender, but did express a lot of concerns about just the ground level adoption of Bitcoin as that means of payment. There's actually a survey that was conducted last year that I found that found 88% of El Salvadorans did not use the Bitcoin payment channel in 2023. And so there was only, I think, 1% of the total remittances that went through Bitcoin in the country. So this is really backed up by some other survey evidence, and we're seeing that hey, uh, despite El Salvador holding about 400 million worth of Bitcoin in its public wallet, people are actually not really using it in a real tangible way just yet. So big data point here is El Salvador was the first country to make Bitcoin legal tender and was pretty much the poster child for legalizing Bitcoin as a currency. So a lot to go there, and hopefully we get some more reporting done in the next 12 months and see what global adoption is like for Bitcoin, or whether it's just an El Salvador problem here.
Thanks for that breakdown there, Nick. Onto the altcoins, we've had some updates. As always, we try to cover a handful of the main altcoin updates that we see over the past week or so. Nick, I'll let you kick things off with the Ton sort of blockchain.
Yeah, this is a great one to really dissect, because we left the pod last week with concerns over Ton and its links to Telegram, with its founder being arrested and is now on home arrest awaiting possible trial in France. So Ton experienced a lot more pain with two separate periods of downtime. This downtime lasted about 7 hours or so in total, and it has really resulted in a bit of an exodus in value flowing away from the Ton ecosystem. I think it halved in terms of TVL in August, from about 765 million to under 400 million, despite the price of Ton slipping about 17%. So we're seeing disproportionate amount of total value locked that has been reduced on the network comparative to the price of the token. So I didn't see this was maybe a coincidence or bad timing, but the issues I was seeing were stemming from some meme coin mints and activity on chain. Does show a lot of the network instability, possible centralization challenges. But this is also something that you nailed, I think, Matt, where you were looking at Ton in a couple of the pods and raised a few concerns of whether the network could actually handle a lot of the usage, a lot of the adoption. There was a lot of talk about different applications, how maybe Telegram on the Ton Open Network couldn't really handle any really sophisticated programs on it. It was a bit handicapped in a way. I'm not sure if you have anything else to add, Matt, but I think you're really right on a lot of these concerns that perhaps Telegram or the Open Network wasn't as great as a blockchain as it could be, and there was a few concerns.
Yeah, I think it's sort of having a stress test moment, I think, which is like, is that good or bad? I think it's sort of, you can view it either way, I suppose. It's an opportunity, I suppose, to improve the infrastructure and, all the third party tooling for Telegram is quite poor at this stage, which again is sort of not it's not being too harsh on them. I think like at this stage of its life cycle, like you wouldn't expect the third party tooling and all that to be like really first class. But I think the biggest thing to notice here or to pay attention to is, yeah, do things improve when there is an influx of users onto the Ton blockchain? Does it stand up okay? Because we've seen similar blockchains go through this iteration process of stress testing. A lot of them have failed, but then improved over time. Solana is the best example there. But if this keeps happening for Ton, it would be rather concerning. So, yeah, I think they have their theoretical sort of transactions per second, which is a very large figure. I can't actually remember off the top of my head. But the one where what happened last week, the transactions per second where it actually then started to buckle was a fraction of the sort of theoretical TPS that they sort of talk about and espouse on their website and whatnot, which again is just a reminder to anyone when they're talking about, when you see transactions per second, it's often a theoretical number done in a really controlled staging sort of environment. But when things are live with real economic value, at hand, you often see them buckle under the pressure, especially this is a great example of a blockchain that probably hasn't been exposed or has no experience having that mass sort of influx of users, which happened around these meme coin mints. So always worth keeping in mind. And arguably, it's just as important now to sort of pay attention and lean into whether Ton can improve off of these early challenges. So yeah, I'll be watching with interest to see if that's the case. Why? Because if there is improvement, then that's a sign that there's, hey, some pretty strong community interest there, even developers working hard to fix things, which, as we saw with Solana early last year, that was a great sign for us as a team at Collective Shift, where we went, wow, there's a lot of effort going on here to make things better, even though at the moment they're not great. We'll move on to the next one here in terms of, well, Ethereum overall. And the Ethereum Foundation has sort of come under fire for just a lack of transparency about like their treasury management. In simple language, the Ethereum Foundation has a lot of ETH. Um, to really keep it simple, and they sort of progressively, they're not a foundation in the sense where you can donate money. So they've sort of got this existing pool of capital, and then they're responsible for continuing to allocate that to, I guess, for purposes related to sort of furthering Ethereum in whichever way they see fit. So that involves a lot of grants, paying some core developers, as well as some other sort of expenses. And we finally, after all these years, have seen some more transparency coming through here. So yeah, Josh Stark has provided some pie charts of their expenditures, which is really positive, because yeah, people were getting frustrated with just how they continue to sell ETH, but not much insight into sort of how they're using that ETH. So it's a really good step to see. And as we can see, the ETH is not just being sold and then just all the founders or all the core developers just going off and just retiring or whatever. They're actually putting it to, well, in their opinion, sort of good use to further research and development in sort of all of these different areas. Really, there's a lot of areas that are going on to, I guess, furthering what Ethereum and even blockchains overall can do.
Yeah, I saw a lot of controversy. This probably sums up maybe Ethereum's sentiment at the moment that
Mm,
not even, the Ethereum Foundation or the Treasury safe here in terms of the sentiment, uh, really turning against Ethereum. And you would think as well, hey, 100 million. We've seen some of these other crypto treasuries like Polkadot. They've been, I think they have a treasury of, or they were burning, 30 million, 40 million, 50 million, you know, things like private jets, really weird sponsorships at events. If you put it in perspective, everything that the Ethereum Foundation does and contributes to Ethereum and the EVM and the total network as a whole, hey, it's actually probably pretty decent value for money, considering things like I think Uniswap was first spun out of an Ethereum Foundation grant. So, things get granted, a lot of things get granted, and we're still yet to see a lot of the high value things that have been granted really come to market or are realized in a tangible way. So in my mind, probably overdone a bit, but really sums up, I think, the state with Ethereum sentiment.
yeah, agreed with everything you've said there, Nick. What have we got here with Tron really having a moment?
Yeah, this one's a quick little snapshot here because we're seeing Tron, which typically takes some of the best bits of other ecosystems when they first copied and pasted a bit of a stablecoin. Now they're doing the same with one of Solana's highest revenue generating applications, which was Pump.fun, which is essentially a one-click easy platform to distribute tokens and meme coins. So Tron recently launched its own version and competitor, which has really started to gain a lot of usage and attraction. And we've seen Solana's Pump Fund revenues and activity drop, I think almost 50%, hitting a 5-month low. And so this is translating to lower on-chain volume, lower on-chain fees and activity to Solana. So there's a few ways we can kind of take this. One is the view of hey, Solana is maybe too reliant on meme coin activity, a lot of not really high value usage. It's kind of an indication, hey, was a lot of the activity just a lot of euphoria, a lot of meme coin speculation, which probably isn't the best outlook for Solana. In that little bit there, you would want to see a lot higher quality usage on chain rather than things like Pump.fun, which are just meme coins circulating really. And then the other picture here is Tron, and Tron's becoming quite the behemoth and going under the radar uh, for good and for bad. But it's just showing that, hey, Tron is really here to stay. It's getting a lot of value, a lot of adoption, but I still take Tron with a bit of a grain of salt and a bit of caution, just considering a lot of the controversial surroundings and founders of it all.
Yeah, well said there. Onto the last point or last project for the past 7 days, and we had MakerDAO rebranding to Sky. So yeah, this was I think projected I think more than 12 months in advance. And yeah, the timeline had not really ever been totally known, but we suspected, and just reading the forums and stuff, most people were expecting it to happen, around the middle of this year. So yeah, they've got that in at the end of August here. And it's, I suppose the details of it are much like what had already been more or less announced, I suppose, if for those who were paying attention. We saw there are now 2 new tokens in the Maker ecosystem, so 4 in total. We've got DAI and then USDS, which is USDS is a new sort of stable coin. And then we've also got MKR token, which is staying, but now we've got the Sky token. So in September, the DAI token and the MKR token, the holders of those will now have the option to migrate to those, or they can just decide not to get involved in anything and just keep their DAI or keep their MKR tokens. So this is now all rolling out, and I would expect more announcements happening, in September, October, just through to the end of the year, as Maker sort of continues on their multi-phase sort of end game plan, which in reality will take at least 2 years to sort of play out, in my opinion. So the reception to this was quite mixed. I think the altcoin sentiment at the moment really didn't help it, with the MKR token sort of selling off on this announcement, in what was a rough month for altcoins overall, as we've talked about. I think any sign of there being a sell, being there news happening and then people selling into it, I think if that's ever going to happen, it's in a market condition sort of like this. So that didn't really help with the perception. But there were some other things that people sort of weren't too impressed with. I think the video, Nick, was one of them.
Yeah, it was one of the funnier project announcements and rebrands with Rune, the founder of MakerDAO. He come out in a bit of a really odd, you know, uh, not haphazard, but very informal announcement of the rebrand. And we actually had some of our members inquire whether it was real or not,
Yeah.
which I think was actually really summed up the delivery of the updates. So not a big red flag for me, but just a bit of an odd one, and one I'll continue to watch make a bit carefully and just see how they go with the rebrand, because it hasn't been all positive.
Yeah, for sure. I think there's a bigger discussion here to have as well with the whole centralization, decentralization ethos of Maker. I think for years this has sort of been disappearing in terms of Maker no longer being or DAI no longer being a truly decentralized stablecoin. And now with this rebranding of these new tokens, it's definitely targeted more towards a mass audience and essentially a competitor to USDC, even with the name USD in the stablecoin. Again, it's just a more intuitive, like targeted for a mass audience, which Rune has always said is the plan of Endgame, is to make is for Maker to, I guess, become a lot more accessible to people outside of crypto. So we'll see if that actually comes to fruition. But of course, being a bit more removing those decentralized properties, the criticism is people who are Maker, big believers in Maker, are now disappointed. So early adopters being disgruntled is never great in crypto, whatever the project is. And then it's also had the effect of there being, restrictions on who can actually access the Sky protocol and also the USDS stablecoin, again, which is more of a reflection of the state of, even stablecoin regulation out there. So being a lot more compliant, having a sort of a blacklist, or however you call it, sort of function where the Sky protocol sort of entity can actually freeze certain accounts, which is what Circle can do as well as Tether. So again, more of a competitive dynamic there, which we can get into more in our member content. But no, for now we'll move on to other things we're sort of looking forward to in September. Have you got anything, Nick?
I think we just got a few high-level conferences. It's kind of conference season that's starting to happen, and we got the Korean Blockchain Week that is happening soon. Do you have the date for that one, Matt?
Yeah, it's
I
at
think it might
the
be.
September 1st till the 7th. So the speaker lineup is quite impressive. So I wouldn't be surprised if there's some actual project announcements during this a very popular blockchain week. As of course cities around the world have them, but Korea is one of the, relatively speaking, it's up there in terms of countries, in terms of crypto adoption. So yeah, really good to see a lot of high caliber projects here, and it is kicking off the start of sort of conference season. I think with the last one of this month, a lot of eyes are on Breakpoint, as we've sort of been talking about recently as well, Nick.
Yeah, Breakpoint's probably the big one here, and hopefully we start to hear something to do with Fire Dancer and its big upgrade. That should really shake things up for the Solana ecosystem.
Yeah, that's it. Okay, in terms of underrated or overrated, what did you have for us this week, Nick?
I had Alluvium as potentially being maybe overrated for its launch, or it was just a mixed bag. And we saw that there was actually some Web2 YouTube content creators who come out and reviewed the game. Uh, One might be putting a screen now, but it wasn't a great reception, to be honest. It was almost a worst case scenario for the launch. It's been 30 days now, so we're starting to see what action adoption is like for the Alluvium game. It was kind of seen as the litmus test, the biggest test to whether people want crypto games and want this, to really own their own assets and to own their own experience. This has come out with a much lower amount of active players than they would have liked. My estimates puts it at less than 3,000 um, on the week, with over 30,000 who have actually completed the tutorial, it looks like. And that's a kind of a maximum number because if you complete the tutorial, you get two of these Illuvatars, which are their NFTs. If you were into Axie, you think of them as your little Axie NFTs that were the main player of the Axie universe. So a bit of an overhyped launch, unfortunately, and there's going to be a lot of pressure now on the Alluvium team to not only raise more investment, because they've got really grand plans to expand the universe, bring in more fixes, more patches, and more content. And so this come out pretty damning, and hopefully Alluvium can rebound. But we got some member content coming out within the next week just to dive into why we're kind of disappointed at the launch and why we're probably rethinking Alluvium and whether they may not be able to survive this because it's looking almost at a crossroads for one of the biggest crypto games out there.
Yeah, looking forward to more content on that. Because I think crypto gaming overall still has a lot of potential, but potential being that key word there. So this was a big opportunity to showcase what crypto gaming can do, and so far not looking too great. But yeah, we'll see whether that improves or not. In terms of my sort of, I would say, underappreciated is really just a simple thing of just the seasonality of crypto. It sort of continues. It's a very simple metric, but it continues to sort of surprise even me at times of just how consistent it is. And why am I mentioning it now? It's just because August and September historically are two of the three worst months for Bitcoin, dating back to 2013 market data. So September on average, so that's a mean average, is actually the worst of the 12 months for Bitcoin with an average of negative 4.6% return. And as a median average, it is also the worst month of the year. I believe it's the second worst month there actually on the median average, with August on the median average side of things being the worst month. So we're really in a tricky spot. Of course, there is always outliers. We can always hope. With last year, actually, September, if some people may remember, was actually up nearly 4% for the month for Bitcoin. So it's not a hard and fast rule that this time of year has to be really bad for Bitcoin, but the odds are definitely stacked against it. So I would still say underappreciated. I think the impact of this time of year just being quiet for a lot of different reasons. It's sort of just this recursive cycle, I think, where even altcoins, I think we were talking the other day, Nick, you also get altcoin projects pushing off announcements at this time of year because they saw in previous years that volume and attention tends to be rather quiet at this time of the year. So I think this seasonality aspect will only keep getting stronger for crypto. But we'll still be here. So thank you all for watching this week, and we'll continue to update you throughout September because we are still gearing up for what I definitely believe is a strong Q4 for all of crypto. So thanks for tuning in. And if you did want more insights from Collective Shift, definitely head over to our free weekly newsletter and subscribe. So that is issued every Friday, and you can subscribe to that at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.